Let's get started. Thanks everyone for coming to this morning's accounting sessions. I'm Sterling Huang. I'll be chairing the sessions. We have three wonderful papers organized for this morning's sessions. Before we start, I would like to share a few housekeeping rules. First is that each presenter will have about 25 minutes uninterrupted presentations, followed by 20 minutes of discussions, and then about 15 minutes of Q&A sessions. Now, during Q&A sessions, there are two ways for participants to raise their questions. The first is to type your questions in the Q&A chat box. The second way is to use the raise hand functions. Now, once you raise hand, then I will try to unmute you, and you will have the opportunity to ask a question directly to the presenters. Between each papers, we will have about 15 minutes breaks to turn over the slides and set up for the next presentations. And without further ado, let's welcome our first presenter, Pierre Liang, to present his paper on pattern recognitions and anomaly detections in bookkeeping data. Pierre, the floor is yours.
Thank you, Sterling. So let me see if I could start the share. Can you see my slides?
Yeah, we can see the slides.
Full screen, good. Thank you. So I'm thrilled to have this chance to share with all of you some of what we have learned in our work on pattern recognition and anomaly detection. And I look forward to chatting with you about it, especially with so many friends, old and new. Now, a bit of a disclaimer, unlike some of the papers that you may have seen me present in the past, this work is new in at least 3 dimensions. One, it has something to do with the debits and credits, the mechanics that has deep roots in algebra and graph theory. And second, it actually helps solve some problems repeatedly faced by accounting professionals in practice. Third, it involves us learning some fundamental theory of computer science, like minimum description length, and working with computer scientists here at CMU. So now I have to say that personally, this adventure may not have taken place at all if it not for the influence that I have received from these sources. So I want to acknowledge them. First, these accounting scholars has influenced my thinking a great deal. First is Yuji Ijiri, my mentor here at CMU, with its lifelong fascination of the structure of mathematics of bookkeeping. Professor Jing Li, a former CMU faculty member here and co-author of me on some linear algebra work on quadruple entry bookkeeping prior to my graph mining adventures. And John Fellingham, who I remember told me when I joined CMU to pay attention to Klaus Shannon's entropy work and on data compression. It took me a while, but I finally got here. Now, in writing this paper, my co-authors have taught me a great deal in the process. So Aluna Wang, who is on the Zoom call right now, was a Kepler doctoral student whom I had the pleasure of working with in the last few years. She will be joining HEC Paris and their AI lab there. Christos Falatos, a computer science professor here at CMU, who had taught me much of the theory that I learned in this paper. And Lemon Akligou, a faculty member at Heinz and computer science here, also at CMU, and her team, who have been my main collaborators and introduced me to the world of graph mining. So let me warn you that this is an unusual presentation, as this project is truly an interdisciplinary effort. So for the most part, I plan to talk about a specific example or use case in ML language of the pattern recognition and anomaly detection. It is part of a larger joint interdisciplinary work with the help of our industry partners from PwC. The second part, I will share with you some of my broad lessons that I've learned from my recent work collectively. And at the end, I'll list some other use cases for minimum description length before concluding. So now I'm going to describe to you what Professor Akalagu and I and our team did in this specific anomaly detection work using graph mining to detect anomalies in bookkeeping data. Now, some of you know that I like cooking, so here's a cooking analogy. To cook up this research, I believe we need three main ingredients. And the first ingredient is good data and problems from the field having a big and practical impact. An anomaly detection task is very pervasive and important in the real world, especially when confronted with large volume of data like journal entries, detecting fake Amazon reviews, detecting spam attacks in cell networks, you name it. The second ingredient, we need some good theory in the domain, either economic theory, but in this case, the royal and ancient mathematical theory of bookkeeping. And the third ingredient is that we need some good tools. We need some toys. In this case, modern graph mining techniques with clever algorithm design and powerful hardware, GPUs. And mixing them together, of course, makes it really cool. So let's look at the first ingredient, data and problems defined from the field. Simply put, the data is a large volume of transactional level journal entry data. And that's going to be provided to us by our industry partner. The problem is that we need to rank these transactions according to how anonymous they appear to be using a computer program. Now, inside organization, the main bookkeeping data are organized using journals and ledgers. The general journal on the left here gives a listing of each and every transaction in a chronological order. And we're all accountants here, so we all know that double entry bookkeeping links account together when these journal entries are posted to ledgers. And of course, for even reasonably sized entity, we have an enormous amount of data that's in the journals and in the ledgers. In our project, for example, we're working on a data set that has 17 million journal entries per year. So too much data and detail for a human being to process efficiently in audits in its raw form completely. So our industry partner wants us to develop algorithms to spot anomalies in these journals. So here's a snippets of the real data, and I apologize for those who read papers that these data were shielded because we have data use agreements with our industry partner. These two lines represents a journal, a transaction, a very simple journal entry. So if we zoom in here, you could see that this journal is identified by its journal ID right here. And then two accounts are affected by this journal entry. So it's a simple journal entry. Additional information includes the date, entry time, effective date, fiscal year, user and approval pair. These are what we call metadata, information about the entry. The actual journal entries are credits and debits of the same amounts and the two accounts that's affected, and that's what we call relational data. So among the endless entries, some contains error and some may be fraud. So much of the internal and external auditing work has been to find a way to spot them. It is very daunting for human beings, right? Only a few transactions are sampled in audit. Machine can certainly help. So this is what we are asked by our industry partner. They give us some journal entry at the GL level, so general ledger level, a year or 2 years, or for division for entire firm, in a chronological order. We are asked to create a technology in this blue box here to generate an output that lists the same transactions by their anomaly score or anomaly ranking, the highest being the most anonymous. Now, the requirement is that the blue box needs to be general, scalable, explainable, and unsupervised. General means that it should not be custom made, right? The solution should work for GE and should work for Netflix. Scalable means the runtime should not explode when we double the size of the data set. Explainable means that you cannot just say the computer says it's an anomaly. You have to be able to explain it. Unsupervised means that we typically do not have training data on these journal entries. So we need to, the solution has to be unsupervised. So here's our solution. the data comes in, the metadata go through a detector we call complex, which handles categorical data items and gives an anomaly ranking of all transactions. The relational data set, the double entry bookkeeping part, go through a new graph mining based detector algorithm we call codetect, a new technology that gives a ranking of the same transactions. And then we combine or assemble them to generate a combined ranking at the end. So I want to describe to you how we develop codetect, the graph mining based solution. So here comes the second ingredient. We need some theory. And here we use bookkeeping theory to construct graphs. So I told you earlier that the bookkeeping theory comes from the Royal and Ancient, and I was not kidding. Here we have to go back to 1400s Italy. It was a misconception that Luca Pacioli invented double entry bookkeeping. He was a monk, a mathematics professor who wrote a book, math book that included a description of the double entry bookkeeping practice in Italy at the time as a practical example of linear algebra. And this is our connection to double entry bookkeeping as graphs. Now, journal entries, debits and credit, looks very pedestrian. And we teach this sometimes in high school. And typically entry-level clerks work on these things. But the theory is actually very deep. This is actually what fascinates Yuji, my mentor, because the power of mathematical representation. The same debits and credit language can be equivalently represented using matrices. Some of you may be familiar with the linear algebra work by the Ohio State group. But relevant for us, the same debits and credit can be equivalently, and in my mind, elegantly represented using graphs. Okay. What do we mean by representing journal entries using graphs? So here's a simple example. When we teach our students that a company makes a credit sale, the journal entry is debit receivable and credit revenue, like this journal entry from the real data set. Now we can represent this by using the convention that converts accounts to nodes, entries into edges, and debit is an inflow, credit is an outflow. And then in this example, the simple transaction is transformed into a graph with two nodes and a one directed edge with an arrow, right? Now, a more complicated transaction with three debits, or three credits, one debit in the same transaction give rise to a star-shaped graph. And here we have a sales tax pass-through that we have to account for in the accounts receivable. Now, yet another complicated transaction would be multiple debits and multiple credits. So in this project, we learned that graph construction is actually non-trivial. From the accounting side, a lot needs to be done. And in the real data set, the largest single journal entry has 65 nodes, that means 65 accounts, and 1,700 edges. And this is a graph that's generated by simply overlaying all the transactions over just 10 days in one of our data sets. So it's massive. So now we need a third ingredient, some cool data mining tools. So the specific unsupervised graph mining tool of the application is what's called minimum description length, or MDL, for pattern recognition and anomaly detection. So what is MDL? So I want to give you a motivation instead. There's a long mathematical definition, but this will do. So to motivate MDL, I want you to consider what's called ECA, or elementary cellular automata, Rule 30. So this is made famous by Stephen Wolfram, who's the creator of Mathematica. Rule 30 consists of purely deterministic instructions to generate the next row of cells from an existing row of cells. So for example, this white cell is created on the second row following the instruction from that zero instruction at the top that says a Y cell shall follow from 3 Y cells immediately above. This black cell is filled by following this other instruction in the Rule 30, 8 instructions. Now, the 30 in Rule 30 is simply restating the instructions from base 2, which is binary base, to base 10, and that's 30. So this picture shows the first 15 rows of an automata, which automatically generate the next cell for 15 times. And starting with a entirely white cells, except one black cell in the middle. This is the picture, which is the famous picture of the first 250 rows, which appears orderless, especially on the right side. In fact, it is said that this property of Rule 30 satisfies the formal definition of chaos and is used, in fact, to generate random numbers in Mathematica. So next time you use Mathematica, you know that random numbers are actually it's deterministic. So the pattern that's generated by Rule 30 is of interest because it's often found in nature, like seashells. So in fact, you can Google Rule 30. Now, what I want you to think about is reverse the process. So suppose you are given something like this 250 rows, and you are asked to discover the pattern. Now, of course, knowing the picture, right? The best pattern to describe this is, in fact, the 8 rules that we saw in the last slide and the initial condition. But maybe there are other ways to describe the same picture. But the key idea here is that the shortest description of the picture, we need to look for those. And that's the MDL idea, is data compression. That means better models or better patterns compress the data better. So conceptually, what you will want to start with is a primitive data set, in our case, like journal entries to be described. What we do first is to manipulate these objects and decompose them, the totality of this, into 2 parts. One is what we call the model, M. We call these pattern sets or language dictionary. And then the second object is data given the language, or given M. And that reproduces the original primitive data set using the model language and hopefully make it easier to express. In other words, we want to describe the same primitive data set using 2 man-made parts instead of restating the original data, which is just too voluminous, literally. So the man-made part needs to be efficient in some way. Now, how do I know which model is more efficient than another in describing the same data set? What we do now is to encode them into binary codes, into computer codes. And so any model and the data given model are now converted or rewritten into a computer codes to maintain in such a way that whoever received the code can recover the original data losslessly. Okay. So that's the constraint. The objective function is to minimize the total length of the codes of both M and data given M. So this is the essence of MDL, minimum description length. And this is actually the most challenging part computationally. Now, the MDL has its origin in the 1970s. It has its intellectual roots in a concept called Kolmogorov complexity that was developed in the 1960s. The idea is that you can measure, the pattern in any object, like a pie, the number pi, right, is an object that we want to measure the pattern in them by the length of the computer program that generate the object. So like this very short expression that's developed by the amazing Indian mathematician Ramanujan, who found this formula for pi around 1910. Now, in our graph mining context, the primitive object to be described, to be compressed, are the large set of transactions, very different from pi, of course. Pi looks simple. The pattern or the model in this form is a code table, the table that you see on the right here. And sometimes we call it motif table in the graph language, in the graph theory term. The first column of this table, like this, is simply G1, G2, and G3. These are called motifs. They are matched, each of them with some code that's labeled C1, C2, and C3. So it's a long table. A motif is a simple substructure or subgraph that can be used with some other motifs so that we can reconstruct a transaction graph in the real data, like the example on the left here. Or in graph theory language, we need to cover the graph using motifs. Right? Now, the candidate set of all possible motifs is huge. It's exponential because the graph is high dimensional objects. Now, to ensure a lossless description, the table must be comprehensive enough so that collectively we can describe each and every transaction in the data set. Our algorithm's power is to quickly find the best motifs to describe it. What do I mean by best? Meaning efficiently recreating the transactions. Intuitively, if you have a repeatedly occurring part of a transaction, like let's say accounts receivable to sales, you may use that as a motif. Okay? But of course, our algorithm is data-driven and not human expertise-driven. For any given data set, the optimal motif is learned by the algorithm from the data set. It's not drawn from standard sets. We expect, for example, Boeing to have very different motif sets than Netflix. Now, once you have a motif table, each journal entry can be first converted into a graph, and then using the motif table, converted into codes, and then we can measure the length of the code. And that's the transformation. Now, after the MDL procedure discovered the best motif table, and that's what CodeDetect does, which is very computationally costly, we can do a lot of things with it because it now represents the best language or the best model to compress the given set of data from Boeing. For example, we can find the most frequently occurring parts of a journal entry. The answer is go to the motif table, find the shortest code, because that's from the best motif table. Now, in practice, with PwC, we go the other direction. We want to use it to find all transactions. So using the best motif table, we can measure each transaction with its code length. How long does it take to describe it using the best table? The transactions with the longest codes, even using the best table, must be the rarest, and thus a good candidate for an anomaly. Okay. Now, of course, theories and algorithms are only good if they deliver results. So yes, we have developed the algorithm using bookkeeping theory, using MDL to learn patterns, but we should need to test it if it does its job. So as a test, a new data set is given to us by our industry partner, and we've never seen the data set, and it contains about 10,000 transactions from a real company. Now remember, this is unsupervised machine learning, so using real data. So there are some true anomalies in the real data, but we don't have labels. So our client injected 21 known anomalies that they have created from this company. And of course, our algorithm does not know the identity of these 21 bad apples, and we want to find it. We want the algorithm to find it and to retrieve it. So this is, in fact, a very conservative test. Now, the result is actually surprisingly good. By combining CodeDetect and another algorithm on the metadata, we are able to achieve impressive outcomes. 17 out of the 21 were contained in the 2% of transactions with the highest anomaly score. That means you only need to go down to our list on 191 journal entries to be sure that majority of these 21 are in there. Now, as a longtime accounting theorist working on partial equilibrium information economics models, you have to say, I find this work surprisingly different and cool because we managed to combine a century-old bookkeeping structures like double entry bookkeeping with modern computer science theories like MDL and some really nice tools like graph mining to help solve a very practical problem that's faced by our practitioners every day in internal and external auditing. Now, of course, this is only the beginning. Real audit and accounting work is far more complex than what I have shown you so far, or with the simple AI that we have developed here. So in fact, to take on this journey, I now believe that we need to actually return to the theoretical foundations underlying a lot of this AI work. So here are some broad lessons that I want to share with you based on what I have learned so far. First, I think we want to have a broader view of research. Now I felt a little bit more confident now in getting closer to the problems that's faced by our practitioners. As a lifelong theorist, I benefit a lot from abstraction, but only to develop some formal models. But this recent work has convinced me that abstraction like what we have, like accounting graphs, which is an abstraction, is actually closer to practice than I originally thought. Don't get me wrong, I love to be a social scientist. But I think we should not be afraid of solving practical problems that's faced by our practitioners using abstract tools that we know how to handle. Second lesson is that this return to core accounting ideas. I felt it truly refreshing, and that double entry bookkeeping actually plays a non-trivial role in research, especially as a student of Yuji Yuri's work and someone who has taught debits and credits for so many years. The third lesson is I think we benefit from learning from engineers. We are mostly social scientists. I'm fine with that. But I think we have much to learn from CS and ML engineers when our practitioner, whom we are obligated to study, are increasingly developing these tools and developing these with the help of these engineers. Now, before I close, I want to mention two other use cases in the paper. First is that we use Comprex, which is a existing technology to do the anomaly detection on the metadata, so the data about the journal entries. And we also developed another new solution. It's called Graph Summary, called TG-Sum, to quantify corporate chart of account classification based on how corporate chart of accounts are actually used in practice. I don't have time to go over these details, but I'm happy to talk about them later. So let me close by thanking you for your attention. I hope you learned some CS, some graph theory, and maybe some bookkeeping. If you felt this is a little bit weird, but remember I told you that this is an unusual talk at the beginning. So thank you so much.
Okay, thank you so much for Pierre for very insightful and interesting presentation. So now let's welcome our discussant, Sean Tao from Georgia State.
Thank you. Okay, so first of all, thank you for the conference organizers. I know organizing conference like this size is not an easy work. I saw very good sessions, good papers, good presenters, and very enjoyed. And thank you for the organizing. And also thank you for invitation. And when I was reading the PLS paper, I have no doubt Pierre likes cooking. There's a lot of good ingredients in the paper, and everything was blending beautifully. And like Pierre said, since he's giving an unusual talk about his presentation, I'm going to correspond with unusual discussion with his presentation as well, trying to provide some comments and explain some strength of the paper. So I just want to, at a very big level, I want to explain what the paper is doing and talk about the challenges and talk about my suggestions. So the good things is in the current literature, there's a lot of unstructured data we have right now. So basically, the disclosure or form information here, what PLS paper is about transaction level data. This is a huge volume of data. This is very complex, and it's not an independent data. All the transactions, they are related to each other, and this is very high dimensional and large scale data set. So what we can do with this data set, this is emergent literature. We're trying to use deep learning, machine learning, different computational tools, trying to discover patterns that is almost invisible for human being to detect. And then it's not just about data issue. Once we have the tools to discover the patterns from the complex and unstructured data, we can investigate new research questions, provide implications for practitioners and academics. So in the PLS case, we have all the transaction data. We use MDL to detect the anomalies and the fraud, and we can like Pierre said, it's not just important for the academics, it's also important for practitioners as well. So in overall, I think this is it's the trend of this kind of machine learning research is getting more and more useful, and using the using the complex machine learning and the computational tool to discover the data set we're not able to discover in earlier years. And so I was thinking about what's the best strategy to discuss PAS paper. I was thinking when I was preparing for my presentation. So I like to start with common challenge for all machine learning papers. So I feel like like I said, this type of research is getting more and more popular, more and more useful, get attention from the industry and academics. But at the same time, as a new area, there's some common challenges I have seen through my experience of organizing the GSU and RFS conference. So at GSU, we organized the FinTech and Machine Learning Conference with Real Financial Studies. We kind of received, in the past 2 years, received 300 submissions. All is about machine learning and the FinTech. And we trying to classify the challenges and the topics of all the papers, all the submissions. These are the three common challenges we have seen from all the submissions. And if you guys are all interested, you can go to the website and you can see. So we kind of categorize all the topics, contents, and the lengths, and sometimes we provide some statistical description and summary of all the submissions. If any of you interested, you can take over and can take a look. But I just want to focus on the three things here regarding the paper I'm discussing today. The first challenge is we always get the referee, and also even my paper, we always get the referee on my paper saying, are you trying to sell in technology, or are you trying to sell economic questions here? What's the theory here? So that's the first question normally bounced back whenever I receive whenever I see other referees' comments or even my paper. But I think for PAS paper here, I have no doubt this is an excellent application of the unsupervised machine learning to detect the transaction data. So the question here, I think is very important and significant. Like Pierre said, I'm also prefer research work, not just provide implications for academics, also have some usefulness for professionals as well. Connecting the industry usefulness and the academic literature is also one goal I'm pursuing in my research pipeline as well. So this paper kind of address very important question: how exactly we can detect anomaly and fraud from the transaction data. It's important for auditors, for managers, for a lot of people. So I think for the first challenge, I don't see anything. It's just answering a very important question using a novel application of machine learning. For the second two challenges, I also want to spend some time talking about. One also common challenge I see even for my paper is why this technology? Why not others? So MDL, it's well discussed in the paper. I'm going to offer some suggestions and comments even on this dimension, because people will always ask the question, why MDL? Why not supervised? Why not the neural network? There's so many options we have. Definitely Pierre did a very good job explaining the advantage, but I'm just doing my best to offer some other alternative ways to interpret the methodology and maybe help the audience to understand the technology. The third challenge I was trying to raise up is how to make the explanation more understandable to a broad audience. Personally, I was computer science for a long time, and I switched to accounting. So I find the paper reading very friendly, very easy to follow. But I always ask myself, can I make the paper kind of more accessible to people who do not have computer science background? And this is also I learned from my own experience. If I can do so, I will reach a broad audience, a broad set of audience, not just people who have the double background in computer science and the business. So I am going to offer some comments here. Can we make the explanation? The PL already did a very excellent job explaining it. But I was thinking about, can we actually make the language explanation targeting more for people who do not have any computer science background, and so the paper will have a higher impact. So this is what I'm going to focus on the later two parts: the why this technology, and can we do a better job on interpreting the MDL. So let me just watch my time in case I don't go over. Okay. So the paper did a very good job on describing the technology. I'm just very 1 second to summarize a very important point for my later discussion. So first, representing the transaction data using graph. This is very novel because you can see that each transaction is independent. But if you use the graph to represent the transaction, you can detect the relation between the transactions. And then the second step the paper did is using unsupervised MDL to detect anomalies using this graph and gets what is the anomaly, what is the fraud. So so one thing what I want to suggesting here is I'm going to use a simpler example to explain what is supervised, what is unsupervised, and I'm going to discuss what's the pros and cons of the supervised and unsupervised, and then I will going back to the MDL case, and you guys can see where is my point. The reason I use the LDA is because LDA is a relatively common use machine learning tools in the literature. A lot of papers have used, and compared to the MDL, that sometimes the mechanism is similar in some way in the general case. So let's look at the two cases of supervised LDA and unsupervised LDA. So what people can do with supervised and unsupervised. So look at these words here. We have politics, media, and the topics. So each word we represent the word in the graph, and between the words is the distance, is the semantic distance between the words. So you have two options to understand this all a group of words. The first option is human can label. So let's say I read these words. I say, well, all the words here can be divided into two topics. One is politics, another one is media. So if human being can identify all the words into two topics, and then for a small sample. So what machine can do is machine can mimic the human intelligence of classifying the groups of words into two topics, and then the machine can do the rest of the job to classify all the other sample into the two topics using the machine's pattern, using human pattern, by mimicking the human intelligence. So this is called supervised LDA. So the basic point is human has to label a smaller sample to define the topics for the group of words, and the machine can mimic the human intelligence of the classifying the two topics. So this is supervised. So what is unsupervised? The unsupervised is like PLS says, there's no human intervention. So basically you can see that each word has distance. So machine can actually cluster the words based on distance. So basically, if some words have the similar meaning together, we'll group all the words together as one group. And for other words that have similar meaning together, we will cluster those words into another group. So machine can automatically classify the words into groups based on the semantic distance between the words and without human intervention. So so why we want to say sometimes there's supervised and unsupervised? The good thing about supervised is it's kind of mimic the human intelligence, human process of defining the topics. The unsupervised is save human labeling. You don't have the human subjectivity. But at the same time, because the topics are not defined, sometimes it's difficult to see what exactly topic a machine classified. So machine may classify politics or social, or machine can classify politics or media. So at higher level, at ex ante, we don't know exactly what machine will classify the words into topics. So this important thing we can do is we have to make sure machine classified topics make sense. And this paper did a very good job validating the machine classification in 3 ways. They have the injected anomalies designed by the experimenters. They have the injected anomalies designed by the practitioners. So the idea here is the machine will trying to classify. You can think about each word here is a transaction data. So basically, this example we use here is a word, but in a PL case, each word here, like the politics, you can think about this is just a transaction level data. So what the paper did is once the machine using the unsupervised way to classify anomaly, the paper trying to justify what the machine did is correct. So they used the injected anomalies designed by the different people to validate whether what machine captured is actually what the authors want captured. So this is what the paper do. The something I want to offer here is I want the paper actually can discuss or comparison why not supervised approach can work here. Also discuss the pros and cons and the supervised approach compared to the unsupervised case here. In the paper they discussed. They said the supervised approach need a training set. It's very difficult to get a training set. So they choose the unsupervised approach without human intervention. But the idea I have here is the validation sample, the injected anomaly here, this actually can be used as a training sample. Even this is the smaller sample, but it can be used as a training sample to construct a supervised approach. So the basic idea here is from the A and B, the injected anomaly, we already know this is the labeled anomaly. This is kind of high likelihood anomaly. We can build a supervised approach to learning the data pattern of the anomalies. And then we can build a model which can actually do a better out-of-sample prediction of anomaly using supervised way. So what's the advantage of using supervised way compared to unsupervised? One advantage of interpolation. Once we have the supervised way, we can actually get accuracy of the algorithm. For example, here we can see that the machine actually can identify 90% of accuracy of the anomalies, or 92. So we can have the very clear benchmark, the accuracy of identifying anomalies. So this is one advantage of using supervised. Another advantage of interpolation. When we use the supervised, we can explain why the machine works better. Sometimes it's because of the feature selection. Sometimes because the machine learning captures nonlinear interaction. Maybe it's model selection. So in the interpretation of the model can also offer some advantage using supervised. And at very higher level, difficult level, using supervised approach, we can also answer very important question: why machine can do the job, not human? PL also touched the point. This is very complex. For human beings, very difficult to understand the patterns. But what exactly pattern machine detects, but human didn't? Using supervised learning can also trying to help. It's also difficult to answer the question, even using supervised learning. But relatively, we can touch on that question easier than using supervised. I'm not saying unsupervised is not bad. I just want to make sure it's clear. I'm not saying unsupervised is bad. I'm saying is, if we do more discussion and comparison with supervised, you will highlight the strength of the unsupervised method more in the paper by using the comparison. This is my point. I'm not suggesting the authors change their method. What I'm just suggesting, by offering different comparison, you may highlight the strengths of unsupervised in the paper. And also another point related point is maybe I'm on time. Just give me 2 more 2 or 3 minutes and just finish the discussion. Another point I want to offer is this very interesting point in the paper is the use graph presentation. I also want the if possible, more highlights on the why graph presentations works better compared to without graph presentations. So one analogy I think I can discuss with peer ed is when we look at NPL, natural language process. What we do right now is for each word, we use semantic vectors to represent the word, like word vectors, word embedding. And we show that by representing each word using semantic vectors, it works much better than just keyword search, than backwards approach. It's same thing for the paper as well. By representing all this transaction data using graph, it offers, I think, a lot of good things. It's a dimension reduction for me, because if you just look at the raw transaction data, it's too complex information. By representing the transaction data using graph, it's kind of dimension reduction. But I want the paper to highlight more on the strengths of this. The suggestion I'm trying to offer is, can we build a model which without the graph representation, and you can see that why exactly the model with graph presentation actually works better than the graph without graph presentation. In what way it works better? By doing this comparison, it kind of highlights the strengths of graph representation. Also have the audience understand what exactly graph representation captures and what exactly graph representation can offer the insights comparing to the case without graph representation. Because this is machine, not human. For human, we can easily see that graph representation works better for human. But for machine, there's a likelihood machine can pick up the transaction, the relation without graph. So showing the strengths of graph representation, I think also can highlight the strengths of the paper as well. So this is another suggestion I'd like to offer for the paper. I'm going to conclude with my last point, which is, so in my own experience, the domain knowledge is really important. I was earlier on, I had some experience with medical machine learning algorithm design. So when I was doing some medical machine learning design versus versus finance machine learning design, this is a totally different story. For the medical, you have to use the medical domain knowledge. You have to have the domain knowledge to design model. For finance accounting, you also need the accounting and finance domain knowledge to select the model, to do the feature selection and evaluate the performance. I think that this paper did a very good job using the MDL for the accounting application. The authors, the combined background of the authors from the accounting and the computer science, they combine the domain knowledge of accounting and cutting edge computer science technology together. This can be more highlighted in the paper, how exactly the domain knowledge is applied for customizing MDL. What's the general MDL? What's the customized MDL? How is the accounting domain knowledge is used to create the model? This kind of message and discussion, I think, is critical to send a message to the audience, because this is not just for the paper. For all the machine learning paper in finance, we need to use the domain knowledge to customize the model, and the paper can provide the guideline for us. So I guess that's my last slide. Again, I enjoyed reading the paper, and I hope my comments helpful in terms of interpretation of the methodology, and make the technology more understandable for broad and audience. This is the conclusion of my presentation. Thanks so much. Yeah.
Thank you, Sean. Thank you for doing a wonderful job.
Am I on time or am I overtime?
No, that's okay. It's okay. It's okay. Okay. So maybe we'll give peers a chance to respond to some of the Sean's comments.
Oh, I'm on mute. Okay, good. Thanks, Sean. This is great. Thank you so much for your comments. I'll just quickly mention a couple of things. One is, I think the unstructured dataset comment, I think in the audit context, sometimes human can do it. It's simply there's just too much. right? It's simply too much. So the minimum the computer can do is to help you to reduce the time, right? Because just 17 million transactions for substantive tests. This is just too much. So of course, and there are complicated things that the human may not do. But again, right? And in terms of the supervised, unsupervised, I think a lot of the existing technology at PwC, like when we talk to them, they actually use these supervised. They have like expert, they have some rule of thumb, and to use them. But it's actually their intention to get more unsupervised. And the reason is that human can unbias, can introduce bias in the label, right? They only look for certain things and miss other things. Or if you different companies have different chart of accounts and they do very differently. So what you learn from one may be inapplicable with others. But I take the comment about using that to contrast the importance. I think that's absolutely the right thing to do. And I'll say lastly would be one thing. I mean, I totally agree that graph is actually a bit more intuitive as a data system than, like, say, relational data like SAP. These relational databases. So in fact, graph database is now the emerging database to replace a relational database like Oracle and stuff. But the technical advantage is that graph structure allows much faster, or another way to say it, there's a lot of existing fast algorithms that's already developed for graphs that exploit the graph structure. In fact, one of the algorithms that's needed in the belly is called a maximum independent set search, which is a huge problem in OR, and people have made advances. And that just simplifies, that just speed up things, I think. Anyway, so I'll stop and thank you so much for your comments, Sean.
Thank you. Yeah.
Thank you, Pierre. So next we'll open the question to the floor. So Bing, do you want to ask your question?
Okay. Can you hear me?
Yes.
Oh, okay. Hi, Pierre. Actually, I typed in my question in the chat box as well. So it's a very fascinating paper. My question is kind of, I'm not a computer scientist, so I kind of followed your very intuitive presentation until the last minute. I still don't have a good sense, like eventually how your model can detect the anomalies. Can you give us some intuition here?
Yeah, definitely. So first of all, it does, right? So because we experimented it. So why? So let's focus on the best motif table, right? The idea of constructing that best motif table is that the computer is going to search for a collection of substructures. So the choice set is huge, right? So they need to iterate over all possible, potentially a lot of possible motif tables in such a way that if you use this best motif table, and you can describe the entire data set very efficiently or less costly in terms of number of bits. So the only way to intuitively you can do it is that you look for a pattern that happens a lot in the data set, and you create a motif for that, and you give it a very short code, like 0, right? 0 use very short distance, and then 1 will be another one, right? So use short code, and of course that's too little, right? You need more motifs because you need to describe every possibility. So the best motif table has to be inefficient in ways of finding the most common patterns in the data, and then you assign a very short code for that common component, right? And then you use it in reverse. You then go through all of the transactions and then measure them in terms of how long does it take for the best code to describe the transaction. So if you have a most common one, let's say credit sales, if that happens a lot, it will be scored with very short code, like 0 or 1, the very 1 bit, 2 bits, 3 bits, right? But if you have a very complicated transaction, that will require you, even for the best table, a long code, either using a lot of short codes or very rarely occurring combinations. And that's going to be very, very long code. That's just the Shannon entropy intuition, right? You assign the most frequently occurring signals with the shortest code in the binary, right? So that's why the longest codes using the best table of a transaction, that's the anomalous transaction. That's the intuition.
So can
you use it in reverse. You use it in reverse. Yeah. So it was developed for compression.
Yeah. I'm thinking about like WorldCom, for example. If I remember correctly, WorldCom basically they use some very routine transactions to to commit the accounting fraud, right?
Mm-hmm.
So for that case, then my understanding sounds like your model cannot be able to detect.
Yeah, so that's why all the anomaly detections are always an ensemble. You use a number of detectors, and then it's not trivial actually to ensemble them. That's actually an active area of research. So what this algorithm is good at is to detect what we call structural anomalies. Structural being the unusual combinations of accounts, which will show up in graphs. The one that you were talking about could be detected, may not be detected by this one, but it could be detected by other things, by the large volume that's entered in a wrong time, and that's approved, that's backdated, and that's all in the metadata. And that's why we need to use a battery of detectors. In fact, if you have 10 of them, you run all of the transactions through 10 and find the best way to combine them. That will always improve.
Oh, okay, thank you.
If you're careful. Yeah. Excellent question, though.
Thank you. Next, we've got a question from Wenjie.
Hi, Pierre. It's good to see you here. I just have a more of a clarification. So can I think of this as a human language? So I can think of the motif as a vocabulary, like the most efficient vocabulary people created during the evolution of using a language, right? So if I use it inversely, I can use this language to tell if someone is lying to me, because if because I can think of the code as the grammar. Mm-hmm. I'm not sure if my understanding is correct, right? Basically, what you mean by combining the code with the motif is combining the grammar with the vocabulary. So if you're using a very inefficient grammar or structure of sentences, is my understanding correct that there must be something wrong? You're trying to anonymous. I'm not saying lying or something anonymous.
That's rare. That's rare. Yeah, rare. Okay. Exactly. So language metaphor is perfect, because this is actually exactly how you would compress a large, let's say, text of all the works by Shakespeare. So how you compress the words of Shakespeare if you want to transmit it to a long distance? You first have to compress it because the work is too big. So what you do, you ask the machine to learn how Shakespeare used the language and find the most frequently used words and give it a short code, and the rarest words with the longest code. But that's not enough, right? Sometimes even better to use sentences or some combination of words or certain parts of a word. So the choice set for the language it's limitless, right? So the efficiency is how can I compress, or basically looking for pattern in how Shakespeare speech, so that I can minimize the total cost of computer to compress the data to send it to another direction. That's what Shannon worked on. But we use it not for compression. We want to find the odd, right? So if we have the best table for Shakespeare's work, and then we look for a paragraph and score it, if it is very long, that means Shakespeare don't use it very much. Right, so that's the idea.
Okay, so if
it's language, it's definitely language.
So if I try to mimic the way Shakespeare writes, so I'm trying to think of a Ford as like someone trying to mimic, he's not Shakespeare, but he's trying to copy or mimic the way he writes, and so it is able to detect anonymous.
Oh yeah, that's all deep fakes is all about. So people can write a paragraph that will even fool the expert that this is written by Shakespeare, and that's exactly how they do it. We just created a language table that's dedicated to Shakespeare. Yeah.
Okay. Thank you very much, Pierre.
Thank you.
Thank you.
I
think Bing has another question. Bing.
Yes, because the paper is too interesting to me. Now, the transaction data, I mean, so far you kind of only consider the journal entries. I just wonder, do you guys have the entities behind the journals?
It's anonymized for us.
So you don't know?
We don't know.
Who is dealing with whom? You don't know. Okay.
We don't. Now, intercompany transactions, that's much richer graph structure between entity transactions. That's what I wrote with Jing Li about quadruple entry bookkeeping. If you have that data, our tool would be great to use, because it's amazing what you can do with much intercompany transactions.
I will let you know.
Yeah, I know in the US it's very hard to get those data, but you are very resourceful, Ben, so I know. Yeah, the quadruple entry part with economy-wise financial transactions are absolutely fertile grounds for graph mining, and this is in fact what JP Morgan would do on foreign exchange money laundering detection, because those are inter-entity.
Yeah, I think Wenjie has another question.
Okay, sorry. So I just have another it's not a question. It's more of a I think, is there a way to, I know that, because I think the limitation here is that the data is proprietary. So I'm just thinking, because is there a way to make a connection to decision theoretic, because the data not out of it's created by human people, right? It's created by human in making decisions. Like think of earnings management model, signal jamming kind of model.
Yep.
So do you have any thought of how to make progress towards connecting this kind of methodology with more of what we do as a theorist for a while in terms of decision theoretic? And
I do. In fact, I think the new XBRL development creates data sets that's essentially linked, because XBRL labels are simply nodes that give you nodes that you can recreate journal entry at the entity level, and then the modeling of company behavior, or, earnings management, whatever, recognition versus disclosure, footnotes, it's all coming to play. And I definitely agree. I think Sean will agree with me too, and this is in his talk, that the future, we just get started. The future is the combination of the decision theoretic and the computer theoretic marriage, and that will be truly interdisciplinary, and that will open new questions and for us. And the firms are moving to that direction no matter what. So I think it's all the big firms are setting up shop at CMU, MIT, and Stanford. So it's happening to me.
What do you think that kind of direction can help the theorists, like in terms of selecting models, like making better assumptions, etc.?
That's hard to.
No, it's open question.
Hard to answer. Yeah.
Okay.
Maybe we can take the discussions offline. We're running out of time. So thank you so much for the wonderful discussion today. We'll take a short break. We'll reconvene at 9:45 Singapore time. Thank you.
Thank you, Sterling. Thank you, Sean.
Thank you.
Thanks, everybody.
Thank you, guys. Yeah, see you guys around. Yeah.